Hi, and a good morning to everyone who's joining us on this stream. Let me see. I have Ravi, Imran, Tracy. Hi, guys, oh, okay, Jacob too. Okay, cool. Welcome everyone, and a good morning again. Today we're going to talk about the impact of the pandemic, emerging talent trends and strategies in the startup ecosystem. So if this is not what you signed up for, you're in the wrong Zoom chat. Right. So let's. I wanted to quickly introduce the organizations that have come together to make this happen. So I'm Victor. I'm with SGInnovate. I head up our investment deals here in the organization. SGInnovate is a government-backed investment fund and ecosystem builder, and our main role is developing the startup, deep tech startup ecosystem, alongside great partners such as AON Radford, and we are always looking out to look at new companies, work with great people, and to work with organizations who have needs and a desire, to solve some big problems in the world. Today we've come together with AON to also kind of feature a big portion of our work, which is the talent, right, within the industry, and why it's why we always talk about talent, and why is it such a difficult problem, or challenge to solve. We have a team in SGInnovate, our talent networking team, whose main goal in life, is to essentially bring together talent for the deep tech ecosystem and the general tech ecosystem, and also trying to understand, how we can get our companies and startups and the ecosystem itself to work better with the people who desire to be in the industry, right? And today we partnered with AON to launch the 2020 Radford AMEA VCAC compensation report. So that's going to be a real eye opener for everyone. If you thought you were getting paid too much, too little, this is a great chance to kind of see where you are and whether you're on the right side of the spectrum, right? So without further ado, let me pass the time over to Kyle, to share more about himself, about Radford, and also to start the presentation. Kyle, over to you.
Yeah, hi, thank you. This is Kyle Holm. I'm with Radford. I lead our global private market practice, where we're focused on working with really growth companies. I like to say we have two clients. One is those companies that are growing, and we kind of go from Series A to Alphabet in terms of our clients. We like to focus in on early stage companies. And then we also work directly with the largest investors that invest in the space, the VC investors, and their talent teams, where we help them support the portfolios. So really, I spend about all of my time working with the human capital functions at investors and with the talent folks at some of the most exciting startups in the world. I'm based in San Francisco, and I look forward to the discussion today.
Thanks, Kyle. Maybe could we get you to start on the presentation with regards to on the talent strategies? Here you go. Yeah.
Yep, Jacob.
Thanks, Jacob.
Hi.
So,
thank you.
Yeah, I think Jacob, why don't you give your introduction, and then we can go into the slides.
Sure. So I lead the private market practice in Southeast Asia, and similar to Carl, we've been working quite a lot with the startups in this space. And today, very happy to be here today and taking through some of the key trends in the next 10-15 minutes. Feel free to leave any questions in the chat box, and we'll answer that perhaps in the chat that will happen right after this presentation. So without further ado, just let me jump into the slides. So as you know, I think many of you in this event today are involved in the Asian market, private markets. And if you see the trend over the years, we have seen huge growth in this sector. And particularly so when you look in the blue boxes, which is actually Asia. Asia has been expanding as a share of the global VC-backed deals. It has been growing up to 2019. So this year, up to year to date, is at 33%. But in terms of absolute growth, we have seen a huge growth in Asia as well. And what this means is that there's more money flowing in than ever. And associated with that, we also see that the competition for talent heat up. And if we look at the rise of unicorns and decacorns in Southeast Asia, we have seen 6 and more of these organizations turn up, and they are a lot more startups right now who are growing very fast post-COVID as well. So as this competition for talent heat up, we also see the industry and tech convergence, and tech is everywhere. So it's not just traditional competition from the startup space, it's also competition from global MNCs, local MNCs, because especially with this COVID disruption, what many organizations are starting to realize is that their tech digital disruption is not just a buzzword, it is something that they will have to embrace sooner than later. And what we have seen in the talent market right now is that you're not just competing with startups, but with the traditional organizations, not just in the tech space, but in the non-tech space for this talent as well. And your employee value proposition must go beyond the cash that you can offer. So in the startup environment, typically there's less cash available for salaries, and the value proposition then moves into the equity compensation. So the promise of the riches. How do you come up with a program that's able to attract the right people who move into your organization to drive your growth in the future? And the kind of people you want are probably not the kind which is risk averse. And how do you make sure that we have the right, the equity compensation is able to attract the right people and also motivate them to deliver your growth in the future? Of course, there are also other perks that working in a startup traditionally offers in terms of flatter organizational structures, smaller teams, and also being seen as the innovator and disruptor. So that's something that will definitely attract more people to move into a startup. And as we're talking about leveraging equity, so many innovating firms are starting to move from a traditional one-size-fits-all kind of equity plan, where you typically just have an ESOP, vanilla ESOP, and then you just give stock options to the people who are joining. They're trying to also tweak the design of the plan to actively shape the culture of the firm. Things like, for example, the award eligibility. So I think Kyle can weigh in here a little bit. In the US, they tend to give to more people, to everyone. In Asia, they tend to give it only to the senior management, but we see that changing as well because they're trying to build that kind of ownership mentality and giving more equity to more people. And traditionally, I think in Southeast Asia, it's more a cash-focused compensation scheme, but right now, that's changing as well. In terms of vehicle choice, vesting, the grant size, how do you value the firm? I think there's more thought that's being put into it. Carl, is there anything you want to weigh in at this point in time?
Yeah, no, I mean, I think the ownership culture is the real key there. I think what we see from founders, it doesn't matter where you are, is the real desire to get their employees to think like owners, and sort of, think about creating value. And what a better way to do it than to give them a little slice of the pie. I think that's that's been the successful story that has worked in Silicon Valley for the last 40 years. And it is, essentially the story that other founders want to tell their employees. I can give you a slice of this pie. I have no idea what it's going to be worth. But if we all pull together, there could be significant reward down the line. And I think it's been, something that's worked out. And as I think about the slide that you were just showing and some of the, large unicorns that now exist in APAC, as we start to see those unicorns achieve liquidity, and we start to see some of these folks who have participated in these programs have that wealth creation, it's the kind of thing that will start to feed on itself, right? And it'll start to create this sense of, okay, this really can happen, because once you convert that percentage into, into real value, into actual, money, dollars, it can become very meaningful.
Thanks, Carl. So on top of that, some of the leading trends we have seen in high growth tech companies, what we've seen is bigger increases for fewer people. This was something that we noticed even before COVID, and right after COVID, I think this has become even more accentuated in terms of allocating whatever salary budgets to your most critical talent. Second one is on more frequent payouts. We've also seen some companies look at merit increases paying out twice a year. rather than the usual annual cycle. Again, this is slightly affected by by COVID, but generally we've seen a trend towards more frequent payouts as well. And thirdly, in terms of the salary bump associated with promotions, so we have seen that increase to about 15.2%. And lastly, when we talk about the more attractive equity stakes, we have seen some of the trends, which is earlier adoption of equity plans for employees in Southeast Asia. So recently, I mean, even at the pre-A stage, some of the startups are already thinking about, can we use leverage on our equity plans to attract the best talent into our company. Higher equity stakes for key personnel was also something that we noticed. Benchmarking what kind of equity stake would be competitive for getting people into the organization. And one of the leading trends we're starting to see is also the consideration for monetization even before a liquidity event. So traditionally, we have seen that you need to reach IPO or some kind of trade sale before there will be full monetization. But because of the length of time that companies are spending in the private space before going public, or sometimes even never going public, then there's a need to consider how do you monetize the equity stakes that you hold. And companies are starting to think about how to liquidate some of a small proportion of the employee shares without reducing the skin in the game for the employees. Carl, anything to weigh in here?
Well, yeah, I mean, I think this is, there's some great stats, and I think, there's some places where there's the same as what we see in the US and even in Europe. And then there's places where it's different. If I start at the top of the slide, I would say, the salary budgets where we focus them in on sort of the high performers, absolutely consistent with what we're seeing, in the US and what we see both at startups and at even more mature companies. I think what companies have really found as we think about performance management systems and where to focus that energy is that, let's just say you've got a 5 rating scale. If you spend all of your resources, focused on your 3s, hoping that you can make them into 4s, that's a lot of time. And sometimes when you spend all your time at the middle, you lose track of your very few 4s and 5s. They get distracted, or they don't feel like enough attention is being paid to them, and you lose them. And what we found is that, your top 5 to 10% of your company are going to be driving probably 90% of your performance. So it's really important that top one, I think is really critical to the performance of your organization, is to make sure that your high performers are rewarded. The more frequent payouts, that's something we don't see much of. Merit increases are a 1-year thing, and we don't see much deviation away from that. We might have little things like spot bonuses or awards that employees can each give each other, but that merit increase is unique to the region, and I think probably is reflective of a very competitive marketplace, and potentially a little more turnover than companies are comfortable with. So that second touch point on a merit increase is an interesting one for me. Promotions are about the same. 15% is pretty consistent with what we see. But you've got some expectations built in there at some of your earlier stage companies, that people might even be expecting 20%. I think one of the interesting things about working in kind of that startup environment, that growth environment, is a lot of times people will see how fast the company is growing, and wonder if their compensation shouldn't be growing at the same sort of rate. And certainly that's not the way it works, but that's one of the misconceptions that we can see out there. And then finally on the equity, I mean, I think this is really where we spend most of our time working with our clients, is on the equity programs. And certainly early adoption, I mean, this is the baseline for even the most early stage companies. And most companies, when they reach Series A or when they're gathering their first seed money, they're already thinking about their equity plan and how it's going to be distributed. And one of the things that's kind of an emerging trend for us that we're seeing and has happened over the last few years is even some of these early stage companies, it's not just about the initial equity award when somebody comes in the door, but they're even starting to build in refresh programs so that they're going to give somebody another award moving on like a public company would operate. So really, it's they're really trying to evolve the equity plans very quickly. And I love the last point around monetization. I think this is really important. As companies mature, the reality is they're competing with larger public companies, established companies that have a total rewards approach, right? So they've got kind of a full value piece. And at a startup, when you're offering the equity, that last piece of the pie, it's being communicated in percentage terms. And as much as I might hope that that percentage is going to be worth something valuable, I cannot take a percentage to the store and buy something with it. And so that monetization is really critical. We call it a release valve because there can be so much pressure on the equity program. How do we get some benefit from it to the employee? And so, third-party sales, when a company does raise fund, you allow the employees to participate in the round. And there are, some private placement firms that are out there. We haven't seen a huge rush to those. I think companies are a little reluctant to allow these transactions and kind of get folks onto their cap table that they don't know. But certainly employees are interested, and we would expect going forward that there certainly will be more interest in these programs.
Thanks, Carl. So next, I'll share with you some of the emerging workforce trends in the tech industry. So some of these things you would have heard quite a fair bit about remote work becoming a priority. I think agile work has always been part of the core offering for working in a startup. So the diagrams in blue are basically, so this is a survey that we did in our Pulse survey. The diagrams in blue are basically APAC, and the red are global results. So pretty much across the board, we're seeing APAC following the results of global. There's no huge difference in terms of practices, but the emerging workforce trends, as you can see here very quickly, is that remote work is becoming a priority. Secondly, which is quite interesting, is about factoring location into pay. So some of these organizations are thinking about whether there are any should be specific geographic differentiations for virtual employees, adjusting that pay based on where your home location is. The third one is on re-optimizing people spend. So about a quarter of organizations have already think about base pay reductions, deferral of base pays, and also adjusting the short-term incentives. So this is then linked into the next point, which is rethinking the place of equity compensation in the overall comp spend. So we have seen that there are also, about 10 to 20% of them are already considering to adjust their grant sizing methodology, or to see whether equity can take a bigger part in the entire cash compensation scheme. Carl, anything else to add to this?
No, I guess, the thing that jumps out to me, right, is that the numbers really are the same when we look at APAC versus global. And my comment really, as I think about some of these COVID trends and kind of what are some of the things that companies have been doing in adjustments, I would say as much as the pandemic is very much still a part of the US, obviously, companies in this space have really adjusted, adapted, and I don't want to say moved on, but are definitely, sort of operating under the new normal conditions. And I would say, just kind of, there was a sort of middle of the year period where there was a, well, what do we do? And now it's sort of business as usual. And we're really seeing, strong growth. And I would say the later stage private companies right now, we're seeing a ton of activity with companies that are planning to go public. And so there really is, a lot of activity in this space. We never really saw that much of a slowdown in investment. And it's really been, sort of a fairly resilient marketplace.
Sure. Thanks, Carl. So I know there are a few Q&A questions that the audience have already been interested in. Without further ado, maybe we'll go into the panel session where it will be more appropriate to answer some of these questions. Victor, over to you.
Thanks, Jacob, and thanks, Kyle, for that sharing. Interesting trends, and I think we can talk a bit more during the panel about how some of this could be a little different, right? When we talk about younger companies versus like a more mature company, because I think between the five of us here on the screen, we work with companies of different stages, different sizes, different funds being raised, and also I think in terms of the areas that they are based in, right? Like within Asia, within North America, I think there are some differences that we've seen as investors in companies on both sides of the world. Yeah, so we would love to tap into your knowledge, understand a bit more. So maybe so I think Kyle and Jacob have introduced themselves. So maybe can I take this opportunity to also introduce two new folks who will be joining us for the panel. We have Tracy, who's the head of people at MoneySmart. And Tracy, would you care to give us a minute to share a bit more about yourself and kind of like how you got into this?
Sure. Good morning, everybody. Nice to be here. Yes, so as Victor said, I'm head of people at MoneySmart. I'm actually a consultant, so I work with a few different startups. So typically, I've got sort of 20 years experience in HR, but have kind of come around to realizing that startups and SMEs are kind of the place where my passion lies. So do a lot of work in kind of working with people and HR teams in this sector.
Thank you, Tracy. And we also have with us Imran. Hi, Imran, who's the head of people at Ninja Van. So all of us in Singapore, who have been, ordering a lot of stuff online, who notice the brand. So Imran, would you care to share a bit more about yourself, what you do, and also kind of how you got into this also?
Hi, good morning, everyone. Thanks for joining. So I'm Imran. I'm the head of HR at Ninja Van. I've been with the company for, I think, 4 years now. Feels like 40. And I've been very lucky to see the company grow from 200, 300 man startup to where we're at now, which is 25, 30,000 people. So we've gone through everything. We've gone through everything a startup probably has gone through. So yeah, happy to share.
Thank you, Imran. And we have Kyle, so everyone knows Kyle's. but Kyle, I think you shared a bit about what you do. But could you share a bit more of how you got started in the space and why you're passionate about being here?
Wow, you're asking me to go back a little bit. I've been in the compensation advisory space for almost 25 years. I was born and raised in the San Francisco Bay Area, so I was sort of lucky enough to grow up in a spot where there was kind of the ecosystem existed. I guess my second job out of college was compensation. My first job was, trading equities on a hedge fund, and I didn't like the trading desk atmosphere, and I got into executive compensation from there. And then I just sort of naturally gravitated towards working with VC-backed and startup companies as the companies that I enjoyed advising the most, and really, have spent basically 25 years working with those types of companies. And it was probably 10 or 15 years ago that I met a man named Joe Dobrensky, who was one of the first human capital partners at a venture capital firm. He was at Sequoia Capital. And so for there, it just sort of clicked for me that here was, the VC firms were making an investment in the human capital space. I was interested in this space. And so it just became sort of a natural fit for me as a way to start to work with all the startups and kind of get involved in that community. And I think over time, I've evolved from working with companies on kind of all of their issues that come up as startups. But really now I spend a lot of time working with founders because that's become sort of the emphasis point for the VC firms and really a great way for me to feel, kind of like I'm touching the marketplace.
Nice, nice, cool. I'm so happy to have you here, and also Imran and Tracy. So let's get the conversation going. We only have a very short 40 minutes, and I'm going to factor in about 10 minutes at the end for questions. We already have a bunch of questions on the Q&A board. So for everyone who has a question, please remember to type it into the Q&A section and not into the chat, because I won't be looking at that one. And we'll try to answer as many questions as possible. So let's get started, right? I think the first thing that we want to set, let's set the scene, right? So now this is the impact of COVID-19 into the startup ecosystem, right? So there is no argument and there is no doubt that COVID-19 has impacted globally, the various ecosystems of technology and startups, everywhere, right? And I think there are different results of that. Some have been positive, some have been negative, right? So we understand that there has been impact, but today, because we are focused on talent, right? Maybe could you share in the areas that you guys are dealing with, how have companies been impacted in general, and also from a talent perspective, what do you think have been the biggest challenges that this COVID-19 has brought to the companies? So let me see. Let's start with who wants to start? Okay, maybe I'll get Kyle to kind of give us like a larger picture, and then we'll zoom in into Tracy and Imran, for some of the more local happenings.
Yeah, I mean, as I mentioned kind of at the last slide, I think there was a serious pause that happened, when things first started, breaking, and we were holding almost every 2 to 3 weeks sort of gatherings of lots of startups to get just the pulse on what they were doing, and there was a lot of sort of questions. And what was interesting about when things first broke, the larger firms that we also work with, I don't necessarily work with them, but the larger, Apples, Facebooks, Googles, they sort of said that they were going to take this opportunity to recruit all of the talent that exists in the startups, because they knew they were secure. They knew that they could offer security, and the startups would be, sort of in an unenviable position. And so, the startups were kind of feeling this uncertainty about how do you handle this from a business perspective and keep your runway there, but then also the large, more established companies coming directly after their talent. And so, there was some real pressure. And what we saw for those companies that were feeling the pressure was they really went hard in with equity awards and really said, look, we believe in our employees, and while this is a difficult time for us cash-wise, right, we're going to give you more of that bet on the come. And so, that was sort of in that middle period. Like I said, now I feel like, these companies, they're so adaptable, they're so sort of capable, and they don't have a lot of the sort of history that makes it difficult to make changes. I think most of them have adapted and I don't want to say moved on, but most of them are operating very efficiently in the current environment.
Cool, thank you. Tracy, would you like to give us a sense of MoneySmart, what you guys have, what's happened to you guys, and also kind of like with the companies that you've been dealing with, what have you seen?
So, yeah, I would agree with Kyle. There definitely kind of was a pause initially in terms of, okay, this is going to be a significant, issue for 2020. What are we going to do? Because I think, most startups, operate with very minimal fat in terms of, they had to really watch costs and expenditure, and at the same time, maintain their revenue and try and push a revenue sort of growth forward in a difficult market in a lot of cases, with things sort of changing and adapting for everyone. And then obviously at the same time, all of the implications on talent in terms of those sort of cost issues, and maybe, some companies have had hiring freezes, which has put pressure on resources internally. Others have kind of had to sort of watch staff benefits and expenditure in that sense. Not to mention the fact that everyone has had to obviously adjust with the working remotely. So that's been a huge shift, from a HR perspective in terms of supporting people and supporting managers to suddenly have to develop skills to manage this remote workforce rather than being in the office together. So yeah, lots of push on kind of L&D and that support, and just making sure that people are generally, you know, okay in terms of their well-being. But certainly from a business point of view, lots of kind of pivoting. And I think, you know, as Kyle mentioned, it does help that startups are generally quite flexible and adaptable and can move quite quickly. So that's certainly been an advantage in this situation.
Thanks, Tracy. Imran, so how about what have you seen as an operator, you know, running people within an organization at Ninja Van that probably, you know, benefited in a way from the increase in demand for your services? Could you share your experience in the past couple of months?
I think it's a good time for me to remind everyone that Ninja Van doesn't just operate in Singapore, but we operate in 6 different markets. And each of these markets were affected differently, right? We had total shutdowns in some countries, partial shutdowns in others. In Singapore, we were still allowed to operate. So I think it wouldn't be fair for us to say that we really benefited from it. I think as a group, maybe so. But I think we were very, 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 very lucky that because of the pandemic, a lot of retail activity moved online, and downstream we were able to, you know, support these companies who are operating e-commerce online. Right. So I think the biggest challenge for us when it comes to the pandemic was really engagement, right? Usually the first 6 months of the year would be prime hiring periods for us. And, you know, we had a lot of employees who were actually joining, and, you know, we had very little experience in trying to support them coming on board, right? At the same time, we just came off peak in December, and a lot of our operational staff were still, you know, very fatigued from like the Christmas shopping and all that. So it was a very difficult point in time for us to actually rally the troops and get them going. At the same time, for the new employees that were joining us, it was very difficult for us to inculcate them into our culture and into what we are as a company. So I think engagement was the biggest issue. The other thing that was related to that was actually convincing our employees that, you know, as a company, we believe in their safety, right? And as essential workers, so to speak, right? We still are, you know, trying our best to perform as a company, and we want to make sure that you are protected as you carry out your work in the midst of the pandemic. Because, you know, you have riders going out every day, pandemic or not, lockdowns or not, and delivering parcels, and we want to make sure that our employees are protected and give them the assurance that we are looking after them. So that was pretty difficult for us, but yeah, like Kyle said, you know, it was a time where it forced a lot of companies, even us, to pivot and to really look at certain things that they can do during this downtime. And I think one thing that was a good opportunity for us is to look at the available talent there was in the market, right? Talent which was probably a lot more difficult for us to find non-pandemic or pre-pandemic, and then try to engage them and see whether they would like to join Ninja Van.
Thank you. Thanks, Imran. And me playing off of that, right? What has been probably, if you can share one or two, you know, kind of like the biggest downstream talent challenges, right? That you faced, right? So like, in all your experiences, were there specific challenges that were unique to you, and how did you guys deal with it? So maybe since Imran, you ended off,
Yeah.
I'll start with you again.
So maybe I don't think this is a pandemic-specific problem. I think for the guys who actually are in startups doing talent acquisition, I think you understand that the difficulty in actually getting talent on board is really the offer, right? When the dollars and cents are on the piece of paper, and then you force employees or you convince people to join your company. It's a lot more emphasized now during the pandemic, because I think everyone's looking for some degree of stability. Right, and stability stems from you know, the company's ability to pay up when the time comes, right? So I think it is a lot more difficult for us to convince people that we are a stable startup, right? Yes, you know, there are some misconceptions about startups, rightfully so or not. You know, startups don't really make any money. You know, we get funding externally. They're not able to stand on 2 feet. So when does this dry up? Will funding continue? Will I be able to keep my job? So I think giving potential employees or potential candidates the assurance that, okay, we are financially stable, we're able to commit to your employment for a specific period of time. I think that was the that was really difficult, right? Pandemic or otherwise, right? So I think Tracy might actually share some of those difficulties with me as well. Yeah, so that was difficult for me.
Thank you, Imran. Tracy, how about on your end? Like, so what we've seen as an investor, with the younger companies, is that a lot of larger companies have come in to try and poach talent, especially in deep tech, right? Where there's only that many people within Singapore that they can hire. This fight for talent is real. Did you see similar kind of instances where people are trying to poach employees from a small company, and how did they defend themselves in that kind of situation?
Yeah, I mean, certainly, the hiring market has absolutely been quite depressed, this year in terms of COVID, and, certainly there's a lot more people looking for work and, a lot less roles available. So in a sense, for those of us who are still hiring, there's a decent candidate pool out there, but certainly what we found in terms of poaching is that hasn't stopped in the slightest. So certainly those good employees, those kind of 4s and 5s that Kyle was talking about earlier, people still want them and are still chasing them, and there are plenty of people that are still kind of hiring, particularly for that skilled talent. So certainly we are finding that people are still, making those approaches. But I think what we've also found is that people are probably a little more reluctant to move at this stage, just because, they are, it's a very unstable environment at the moment, unless they are going to a super, stable, big Apple or Amazon, wherever they go at the moment is a little uncertain. So I think, a lot of people are kind of happy that they have some stability and security. As Imran said, it's been super important to provide people with that sense of security, to let them know that we're doing everything we can in terms of job retention. Communication has become absolutely key, in terms of, increasing the number of all hands, really making sure that people have information in terms of what's happening, financially, but just generally what's the strategy, how are we planning to get through this? How are we going to ensure that we retain those jobs? So certainly, that's been a huge part of the strategy as well, just to keep everyone informed and in the loop, and to give them that sense of security as best you can in this kind of environment.
Thank you, Tracy. And Kyle, over in the Bay Area, what have you seen? Has it been? What are some of the biggest challenges that companies, whether on the smaller side of the spectrum or to the larger ones, what have been the biggest challenges that they faced in terms of these challenges?
Well, I think there was the workforce challenge was there, sort of at the kind of earlier part of the year, where it was, okay, we're not coming into the office. What does that look like? And so for a number of companies, that were somewhat remote or sort of had it ended up being they just committed fully to, well, we're going to be remote for the the next year going forward. But that really was a challenge in terms of, are they prepared for it, and what sort of just kind of some of the fundamentals of building a series of home offices. But now that we're sort of past that and everybody's kind of got that settled, I think that we're back to the challenges that always exist, which are, it's a highly competitive marketplace for a very small set of people who have both the skills and the flexibilities to do it. I know I saw in the chat there was a question there around, it's largely younger people, within the broader marketplace, and is there a desire to, or how to sort of people later in their careers enter? I think this is an interesting point because as we saw a lot of this mobility and flexibility, we actually saw some I would say later in career people sort of enter the startup marketplace because, kind of to Tracy's point, right? Once you realize you didn't have to change offices and you're later in your career and you could take a risk potentially, the startup actually kind of makes sense if you have already had the sort of longer career experience and you have some of that security built into where you are. So we actually saw almost like the opposite of what you typically see, just because there's such competition for talent, and folks that were in that sort of moment where they could take a risk saw, you know what, I can actually take some of this startup or late stage private equity and see if it actually pays out, as opposed to the security that I currently have. So to answer your question, we've now gone back to highly competitive landscape. And I think there was sort of a moving of chairs and seats moving around, and people were, finding where they were comfortable. And now they're realizing, okay, we can still do this. And so it's very competitive.
Thanks, Kyle.
And can I just, sorry,
yeah,
Victor,
please,
I just
please,
respond
Tracy.
to that as well, just in terms of the sort of the demographic of that talent. Yeah, we've certainly seen some really good candidates come through that are probably a little bit older and maybe come from that corporate background, but like Kyle said, are willing to, in this uncertain environment, it's like, okay, I'll have a look at startups. And actually we really appreciate being able to get, not just the talent, but just that bit of maturity and extra experience that can kind of bring that balance to the workplace as well. So certainly it's been a big benefit to MoneySmart and a couple of the other companies I work with in that respect.
Thanks, Tracy.
I actually have one of the investors that I work with. He is actually one of the first investors in Zoom, and he is passionate about actually older founders. So Eric Wan, who founded Zoom, he was over 40 when he founded it. Was working at WebEx and left WebEx to start Zoom. I think there is I don't say a movement, but there is a realization that later in the career folks have a lot to bring to companies. And if we think about some of the challenges that Silicon Valley companies have gone through, and some of the issues that they've had, a lot of it really is immaturity. That I think when you have a little more seasoned workforce, some of that immaturity doesn't mean it's not there at all, but it's a little less likely to happen.
Thank you. So maybe just pulling it a little out of kind of like what you guys shared just now about how folks are looking for job security currently, and also looking at ways, and companies are looking at ways that they can better retain staff within the teams. So what have been some of the more innovative kind of reward strategies that you guys have observed in the market in response to some of these challenges of staff retention and attracting new talent, right? And also keeping in mind that equity compensation in this part of the world is a little less attractive versus like in North America where exits are a bit more common, right? So I think the reality on the ground is that a lot of us understand that not all companies, the exit rate in APAC in general, in Asia or in Singapore, is increasing, but it's still fairly low, right? So while we're all working towards a future where exits will be more common, currently, how do you incentivize folks to join you or stay with you? Let's start with Tracy or Imran. Tracy,
Sure.
yeah.
I can go first if you like. Yeah, I mean, it's absolutely it's a big challenge right now, obviously. I guess in terms of some of the clients I've worked with have taken different approaches. So one has adopted more of a profit share model because their focus is to retain jobs and to protect jobs and to avoid layoffs. Given the various sort of squeeze on the business. So we have. Again, it's all been about communication and sort of getting employees involved in the discussion, but reducing actually base pay temporarily, but moving to more of a profit share so that everyone is rewarded. If we can achieve that revenue, has been one option. And I wouldn't say people are kind of thrilled about it, but certainly I think they understand that if it's that it's the company doing everything that they can to try and protect the job security for everyone. Others have looked at sort of cuts in terms of deferred salary components just to help with that short-term cash flow. I think less so I've seen the adjustment of any equity model. For me, I think a lot of the employees in this region tend to look at equity as more of a long-term bet, as you said. So it doesn't really necessarily, I guess, you know, make them feel a lot better, particularly when they've already got sort of equity versus the second they walk in the door. Adjusting that doesn't necessarily make them feel a lot better in terms of that short-term cash crunch. So we've been trying to focus on benefits, profit share, you know, anything we can to try and sort of, I guess, keep people going through this time until we can top up again.
Yep. Imran, on your end.
So I think, you know, I think as I mentioned earlier, the message of communicating stability in the organization is pretty important for us, right? So, you know, again, we were very lucky this year. So I think the biggest way that we could signal our commitment to job security is actually to go ahead with our bonus payouts and our merit increases, even though it might be a little bit more painful as compared to usual years. I think it's a strong commitment from the company to say that, you know, we're still dedicated to paying out for last year's performance, right? I think this is just very specific to the pandemic. I think outside of the pandemic, you know, options are very difficult to convince people to take up, especially in Singapore. I think the understanding of options and the education behind what options really are is pretty weak, right? So the two things that we actually do for them, and I think options is a big part of our employment packages. The first is comprehensive education on options when we offer you a position, right? So we run through everything: what's a strike price, what's an exit price, what's a liquidity event, and so on and so forth, right? Even if the person doesn't take up an offer, I think, you know, we've done our part by educating people on what options really is, right? The second thing that we do is we also open up our options program to a wider group of people, not just senior management. In fact, quite a significant amount of our employees have options, right? And there's flexibility in whether, you know, to take this up on your first year or your second year, or if you don't want to take it after the second year, you know, there's a lot of flexibility there. And it gives them the option to really look at how is this company doing, right? Do I think that this company will make it in the long run? Do I really believe in what this company is standing up for? And, you know, this kind of flexibility gives them, you know, it allows them to wade in the water a bit before actually committing. So I think it doesn't feel as risky as just giving options as an award and then, you know, that's it, right?
Yep.
So I think flexibility on the remuneration structures and the pay mixes, I think does allow us to give better education on options, right? It creates a culture, I hope, of people understanding what options really is, the value of them, and so on and so forth.
Thanks, Imran. I really like that. I don't think we've heard enough about employers trying to educate new hires on equity compensation via options, you know, and other methods. I think that for a lot of the younger folks joining the industry, you know, and Singapore and Asia being a much younger startup ecosystem than other parts of the world, I think this is a crucial thing, right, that you guys are doing, and thanks for that. I think more people need to be educated on the potential that brings to the job, you know, and I think it's good for bigger employers to be able to share that. Kyle, on your end, what have you seen as you know, as some of the more innovative strategies that you think have been really working really well in the Bay Area, North America, and that you think would be practical to kind of like, you know, deploy in this part of the world?
Yeah, so I mean, I think, you know, the most, you know, innovative strategies are typically the ones that are the cleanest and have the highest, I would say, level of transparency. The companies that are really being innovative right now are the ones that are being the most transparent. And so one of the kind of points that was made on one of the earlier slides was around the monetization of equity. But even if we just think about not, you know, paying somebody, you know, allowing them for liquidity, but just our ability to communicate the value of your equity requires quite a bit of transparency, right? I mean, the cap table is this very secret thing that companies, you know, will not share. And there's reasons for that. They don't want people figuring out, you know, how much they own. There might be some celebrities or names on the cap table that you don't want to get out there. But the companies that are really kind of pushing the envelope and creative wise are really getting very transparent and starting to say, here's your stock, here's the 409A, here's the most recent price that was paid for. It's above that price. Here's the preferred price, and here's from a legal perspective, you can't say here what it's going to be worth, but you can say here's how we're valuing it, and actually provide a spreadsheet that says, okay, this is how we would value your stock. Here's other companies that look like us, and here's their valuation. And we have a lot of founders that are really challenging themselves to say, all right, I want them to act like owners. I'm going to go ahead and treat them like owners and, kind of open it up and show them this is what we're doing. The reason why I think they felt compelled to do that isn't some sort of, benevolence. It's really, they've got to be able to compete in dollar terms. And the only way you can compete in dollar terms at a private company is really providing true transparency.
Thanks, Kyle. So maybe so I'm just thinking of the time. We have about 15 minutes. I'm gonna take this to kind of like to a more forward perspective, right? So we've talked about the fact that that it is real. The pandemic's affected all our businesses and talent. We've spoken about how people have been trying to reward and retain employees in a much better fashion, and also educate them. And the third part, I think, is around how do you believe companies are preparing for the new normal, right? So moving forward, we are going into some kind of recovery and transition in parts of the world. So what are some of the steps, right, that your companies or your company has taken, are taking into going into this new world? So maybe let's see. Anyone wants to start first? Maybe Tracy. I see you smiling. So I think you must have something to say there.
Okay, so yeah, I guess interesting path ahead, and it's still very uncertain as to when we're going to return to kind of normal. But certainly, a lot is being discussed in the HR community and beyond around this kind of remote working, flexible working. What are the longer term implications that COVID is going to have on those structures? And I think it's certainly been quite rewarding to see that even kind of the more cynical managers or leaders around kind of remote working and flexible working have actually realized that, for the most part, people are pretty conscientious and just getting on with working from home. So certainly we've seen a bit of a mind shift change, I think, in that regard. But yes, so in terms of moving forward, I think, we are sort of looking obviously quite closely at, I think we've gone from people kind of wanting to work in the office to wanting to work 100% from home to kind of now sitting somewhere in the middle. And I think people are actually kind of looking for that flexible hybrid model where they have some time in the office with their colleagues, and I think managers are certainly appreciating that face-to-face opportunity to get their teams together now, but certainly then also people want that time at home where they can have that quiet, deep thinking, productive sort of time as well. And the other thing I think that's really coming through from this pandemic is the realization that talent can be based anywhere. If it's a Singapore-based company, we don't have to have all of our talent, sitting in Singapore. We're not all office-based anyway. So certainly I think that's opened up a lot of opportunities in terms of sort of the global talent pool and looking at, certainly a lot of the businesses I work with are looking at international talent. And as long as those time zone challenges can be managed, then, realizing that it's not insurmountable. And so that, actually does provide a great opportunity as well.
Thanks, Tracy. Imran?
Okay, so I agree with what Tracy has to say. I think if anything, this has kind of put all these cynical leaders and people who are against flexible and remote working arrangements to really see that there is some possibility in working from home, having different types of flexible working arrangements. But I think what's very important and something that I hope everyone does is to make sure that you are very aware and you are cognizant of the long-term effects that some of these practices may have, right? I think for us personally at Ninja Van, I think one of the things that we're worried about is, the lack of face time may actually result in, not having the strong social bond, right? As compared to employees who are here on day one, like the day one experience is not the same. And I think that's very important for culture, right? And it challenges the HR team to really kind of dig deep and really figure out how do we kind of continue these, or how can we develop these social bonds regardless of how we actually interact on the work on a day-to-day basis at work. So as much as, yes, there is, let's push for some flexibility in how we work, but at the same time, let's also make sure that we are looking at the implications of these arrangements on things like culture and intangible things like that.
Thank you, Imran. I really love that because I think I'm indifferent to working at home or in the office, but I think the culture of a company comes from the interactions that folks bring to the table, and I don't know, it's an old-fashioned thing, but yeah, I'm just old-fashioned. But anyway, Kyle, what have you seen on your end in terms of steps that companies have taken?
I think pretty much everything that Tracy and Imran have said is what I've seen. I don't know that there's a lot of differentiation on this, and I think it's I haven't necessarily seen anything that I would say like, wow, that's the step everybody should be taking. I think it's been a little bit of a hygiene factor almost in terms of what needs to be done and doing it and kind of taking those steps, but not I don't know. I haven't seen anybody kind of with a value add that's been, what I would say like that's the gold standard. So.
And so I think there's a question that from a Q&A that relates to this about culture, right? And I think it's I think it's a good time to kind of bring it in. So Trishelle mentions that culture is a huge intangible driving differentiation factor for retaining and recruiting employees. Over here in Singapore, it's spoken about, but no one really knows how to design it, right? So do you see culture transformation as a growing trend during these times?
So absolutely, I don't know if I was supposed to go or not.
No.
Yeah.
Whoever it is, it's just a relevant point that I thought would be good to kind of insert here.
So I think this is the key thing that most founders struggle with is how do they maintain a certain culture as a company grows, scales, new people come in, and what we find is kind of there's this 100 employee point. It's almost where you get to 100 employees and the founders, they don't know everybody at that point, right? There's now managers managing people and you lose that disconnect. And so that culture, transformation, right? Or that culture, I don't know if it's transformation, but it's like, how do you scale the culture? Really becomes a question of, where I've seen it done, right? And where founders have been able to get it done has been your next level down. They have that ethos, right? And they carry it, right? So, whatever that founder or, the CEO or the leadership, is bringing to the next level down to their team, that has to be what they want. And so it's not just about living it. At that point, it also has to be about, extending it to their team so that they can extend it down. If I had one word to say, it's got to be deliberate. It can't be something that you just sort of hope happens.
Tracy, you?
Yeah, I was just going to say, I agree that I think it's super important for the founder and the broader kind of his broader or her broader leadership team to sort of maintain that visibility. It does get harder as you sort of get bigger, but people that still want that connection with, the founder and their immediate team and want that sort of accessibility, and that's part of working in a startup. So, it's important to try and retain that, as best you can. Certainly would agree with Kyle, that the next level down and the next level down from that that, have to start stepping up to the plate in terms of also demonstrating those values and behaviours daily. At MoneySmart, we have a sort of a leadership development program where we sort of spend a lot of time reiterating, how people can, how our managers and leaders can reflect and that culture. But certainly, once we're remote and, trying to engage people on VC, it certainly adds an extra layer of complexity. And we've seen a lot of this kind of Zoom fatigue creeping in as well, where, we want to engage people and, to talk to them, but they also kind of a bit sick of being on video calls. So we're kind of trying to find that balance as well.
And I think that ties into what Imran shared earlier, right? Kind of like around what is this new hybrid model where where we're being remote, we can still create social bonds, and also how do we kind of like encourage or create a culture, when we are not always in front of each other, right? Is so I'm looking forward to what you guys come up with in terms of solutions, because I think that is highly crucial now. I don't see us going into the office 100% too soon, and so I think that's something that we are all looking forward to, kind of figuring out how do we help a company to gel and bond in a much better way through this hybrid working model.
Yeah, and what we've also found is it can't just be one thing. So there's an initiative that we put in place that works, and that's great, and everyone loves it for a little while, but then you have to kind of come up with something new and different and keep it moving and keep it fresh. So it's an ongoing challenge.
Sounds good. Okay, so I know I've suddenly just jumped into the Q&A without knowing it. So I'm gonna just run through a couple more questions that we have on the Q&A, and guys, just feel free to answer. It's a friendly chat. From Caroline, do you see a trend that startups are starting to pay top talent equally as much or even more than corporates? And how should startups, especially early stage companies, attract talent besides offering money? Anyone?
Maybe I'll start. So Ninja Van's a pretty old startup in comparison to other startups. So we're about 5 years old, and we've grown quite a fair bit, right? And as we grow larger and larger, the risks become more pronounced, right? And the kind of experience and the kind of skill sets that we want are a little bit more advanced, right? So for us, it becomes natural for us to look at guys who are a lot more experienced, right? We are dismissing the connotation that everyone in a startup has to be a fresh graduate or 2 or 3 years out of school. There is a definite need for people with experience, from larger corporates, is what Tracy mentioned earlier. This is prime time for us to hire these kind of people in the market, right? I think it might not necessarily be a trend, because ultimately, these guys with experience and with huge remuneration packages that support them, and not necessarily be affordable to many startups, right? So you have organizations like SGI, you have the government coming in and helping people give grants and making that affordable. But in terms of the experience required, in terms of the worldliness required from this kind of executive, I think this is something that is valuable to any startup, right? And it has been valuable to us as well.
Yeah, and I would add, in terms of attracting these people, it's certainly, I think in terms of the cash component, most people don't want to drop too much in terms of salary. They're usually a little bit more flexible on the benefits that you might not always get in a startup that you get in the big corporates. But for me, it's kind of the environment and that kind of flexible, kind of, fast moving, fast paced culture that, if you've been in a really big corporate and sometimes a little bit frustrated with the process or bureaucracy that can come with that a startup can be super attractive. So, the people who are interested in that kind of change and that kind of shift aren't always necessarily going to be fully focused on, the package being equivalent, and a bit more flexible in that regard.
Thanks, Tracy. We have a question from Alistair that has some upvotes. It's not necessarily entirely relevant to the conversation, but I'll just ask it anyway, and we can take it from a talent perspective. So Singapore is a small end user customer market when compared to Indonesia, Malaysia, and other countries. So what are the fundamental drivers that are supporting such a vibrant startup ecosystem here, right? And the question mentions volume of VC, stable policy, but I think for the purpose of our conversation, right, from a talent perspective, what do you think makes Singapore is Singapore necessarily a more attractive location because of our friendliness towards talent, and do you think talent is a huge rooting factor for companies that want to start up here?
Well, so so maybe I'll start with just kind of what I consider to be sort of the full ecosystem, and as I mentioned, I grew up in the Bay Area, right? So it starts with it has the universities, it has all of the venture capital firms, it has a bunch of companies that were started there that are now HP, Cisco, right, that have been around, and then it has a fully sort of startup community itself. So it's got the full life cycle. It has the research, and then it's also I don't know 9 or 7 million people, right? So it's kind of like that is a full ecosystem. I think Singapore and it has a lot of those components, but I think the one piece that most ecosystems are missing, right, is that large the engineering talent that so many of the companies are driven by, and so the companies I think that are going to be in Singapore, I think there is going to be a strong ecosystem there. I think this is why we believe Singapore is where we want to make our bets, and I don't want to take too much of Ravi's time because it's a big push for us, right, to start to get this information out. But the one area, right, that I think Singapore will need to sort of get its arms around in terms of the full ecosystem is that engineering talent. And is that in Singapore or is that somewhere else? Because all the other components are there, right? It's got the investment, it's got the, all the other pieces of the ecosystem. But certainly, that it's where do you find that talent? And it could be here, right? But that's the piece I think that we'll need to develop.
Thanks, Kyle. Imran, Tracy, anything else to add? Nope. Okay. Okay, we have a question from Mark. So far, we've been talking about startups paying the sky for talent to come in. How about the opposite? The startups that pay minimal with only a vision to make the world a more sustainable place. Where are they in this ecosystem? And what do the panelists have to say about the talent that companies like these can attract? So meaning that a company who hasn't raised a lot of money, but they have a great vision and dream, what should they be doing, right, to attract people?
So I think the mission-based companies, if your vision is to make the world a more sustainable place, that's going to connect with a lot of people right now. So I think the mission is certainly what companies like that would be using to bring people in. But at the end of the day, you're limited in your tools as far as compensation goes, and this is where it typically is a fairly, you emphasize equity, work-life balance, mission, the fact that you can go to bed at night and feel good about what you do. But from a practitioner standpoint, it's equity.
Okay, so I think we've answered most of the questions. There's one more that I'll answer separately. So guys, if I could leave you with maybe like 15-20 seconds each to kind of like just sum up, one thing that you would really love to see, in this new normal, what would it be? And that would be your final parting shot. Let's go with Imran. You've been really quiet, so I'm going to pick on you.
Okay, so I think not just specific to the new normal, but I think in general, I think there are a lot of guys from startups here. I think do the right thing and really educate your guys about the value of your startup, right? The point of culture is to scale up the day one experience, right? You might not necessarily be founders, but you're trying to get people in and believe in the dream that you have, right? So you must be really, really good at trying to communicate the value of your startup, not only the ecosystem, but that's why you think that this is very important to you, right? I think if you're going to go ahead and like Kyle says, use equity as a tool for you to attract people, make sure you educate them on what equity really is, right? And if you're tying people to this promise, make sure that you do justice by them, right? So yeah,
Thanks, Imran.
tell people more about your startup and tell them more about equity and what it really means.
Thank you. Tracy?
Yeah, I mean, I think as we've discussed, it's all about kind of that engagement and trust and giving people the flexibility to sort of be comfortable in the way that they're working. And, you know, I'm a big advocate for hiring the right people and then getting out of their way. So, you know, just providing that support, making sure that, you know, the managers of those people have the tools and techniques they need to support people in this sort of new version of working that we're in. And then, you know, just be there to support and help people with it. But yeah, not get too much in the way of doing that.
Thanks, Tracy. And Kyle, I'll let you have the last word.
Well, I mean, I can't wait to get back to Singapore once, you know, my country gets things in order and I'm allowed to go places. But you know, really, I am excited for what Ravi has to say, because I think that what, you know, this is all about is really about bringing that ecosystem together and watching, you know, everybody kind of come together and start to create that environment, right, that actually really starts to see some companies grow. And I'm just excited to be a part of it.
Thanks, Kyle. So I thank everyone who stayed on for the entire panel discussion. Don't leave yet, because we have the juiciest part of today's session, which is you know the launch of the 2020 Radford VCAC comp study. I want to thank first Imran, Tracy, and Kyle for spending the time with us this morning. And I'm going to invite Ravi. Ravi, are you online now? Here we go.
Yes,
yeah.
I am.
I'm going to invite Ravi back. Ravi's associate partner and he's a private practice leader covering APAC and the Middle East for Radford AON. Ravi, I'll leave you to introduce yourself and maybe let us know the juicy details around your study.
Thank you, Victor. Just want to make sure, is my voice coming okay? Coming
Perfect.
across okay?
Perfect.
Yeah? Okay. Thanks,
Deep and
everyone. And I know we're running very close to the time, so I won't take too much time and I'll get straight to the point. There have been some good discussions or some good questions that has come our way during the panel discussion around equity, around compensation, around startup ecosystem, culture, and so on, right? So that's exactly what AON and SGInnovate is trying to create in Singapore and in Southeast Asia together, is to create that ecosystem where not only that there is enough data available for companies to look at, but also around change of mindset and how we can kind of bring in the best of everything that's happening across the globe to our part of the world. And in most of our conversations that we have with startups, a lot of times, you know, when they need advice, it's based on personal experiences of how having worked with startups. And at AON, we are probably the only one that has a practice which focuses on startups. And in the US, Kyle and team have been running a survey and has a very mature practice for over 35 years now, right? And because of which all the startups across the globe are benefiting. And today, a lot of startups that we work with, we are either using a public company information, or we're using a US or a Europe market related information. But the whole idea is to kind of create something that will be easily available and relatable to these startups here. And this is just the first step towards creating a whole ecosystem from our side. And the first baby steps towards that is launching of the compensation survey that we're doing in Singapore and in other markets in Southeast Asia. So the idea is to be able to give organizations easy accessibility to the data, and they can use it as and when they want, right? So when we started talking to a few VCs in the region, everybody was like, wow, we would love to kind of sponsor this and get that going. And so as on date, and today is the official, literally the official launch of it, but before that, we already have 7 VCs who kind of signed up for this, and about 50 odd startups have already signed up. And today is the official launch, right? So it just goes around to show that there has been absolute need that existed, and companies are willing to come on board and put their hands together to kind of, you know, create an ecosystem that will benefit all of us here. Now, the beauty of it is that the companies would not only get in return a compensation report, which talks about both cash, equity, and some of the other softer aspects related to talent. But the best thing is that it's absolutely free. You don't need to spend a dime on it. And the usual complaint that we get is that, I don't have a bandwidth to kind of pull through resources to put it in a particular template or do the job matching and so on. Here's the good news. You don't even need to do everything. AON will do all the heavy lifting that you need to. The only thing that we ask for is your intent and willingness to do. And of course, just like any compensation surveys that exist, your data is going to be absolutely confidential. No company is going to get to know any company specific information, because this has been something that we've been doing for almost close to 50 years across the globe. And some of the biggest organizations like the Googles, the Apples, the Facebooks of the world. So the quality has been tested and the confidentiality has been absolutely maintained. So that's again something that I don't want you guys to be really worrying about. Now, what is different about this is we kind of also want the VCs to kind of spread the word about this to their companies. So if you as an organization feel this is something that excites you and you see merit in it and you want to participate, what we're going to do in addition to you getting a free detailed report for all the countries that you submit your data for, and of course no putting in effort, what we will also do is to kind of almost have at a VC level, all the companies that participate, we will also do an hour and a half of consulting time, which will help company specific issues rather than it being very generic in its nature. So for example, if you are an organization who is looking to implement an equity plan, or you've rolled out an equity plan, have run into issues, come talk to us, right? We will have this dedicated time for you and we'll help you through how you can kind of go about sorting it. And all of this, again, is only for the participants. And the last and the final thing that I'm personally very excited about is, again, the need that I keep hearing from a lot of founders is, how do I go about handling different things? So we're going to be defining a HR playbook, which is going to be very simple, easy to understand, to the point playbook, which you can kind of just get to different topics, whether it's compensation, whether it's equity, whether it's recruitment, performance management, whatnot. You can kind of just get to it and it'll help you answer a lot of questions, right? Now, all of this is absolutely free. You don't need to do anything about it. So in addition, let's say you want to access a larger database, which talks about the bigger tech firms or bigger, other industries data and so on. That's again something that we could help you with, but at a very, very nominal fees, and that we could get to depending on what you're looking to do, right? So that's all, that's in terms of the survey that we wanted to cover, and we wanted to kind of leave it out there for you to think through and come back to us on if that is something that interests you. Now, these are just some of the sample reports, and what we can do is after this session, we can send across these slides so you can kind of get an idea. So it not only will give you access to a specific job on how much you need to pay for, but also even like job family, what typically are companies paying within a particular job family, and what's the equity, information that exists in the market, and how that's changing. So it's basically giving you insights into the market that's just beyond that what's the number that you need to pay for, right? And so these are just some of the day's milestones for your reference. So like I said, today is literally the launch of the survey, and we hope this is something that excites you. We are going to be accepting confirmations till end of this month, and then we kind of cut that off. Only reason because after that we need to channel all our efforts towards helping the organizations that have come on board to help them through their data, the quality, and all of those. And the survey, we are hoping to release the report by by March of next year, because it kind of takes us time to go through the quality and scrub it out, especially because this is the first time we're doing it. So from experience, we do see that there could be a little more hand-holding that we will need to do. And hopefully next year, the survey cycle will be a little smaller and a lot more effective because we would have had a lot more organizations come on board, right? And if this is something that excites you, this is my email ID, phone number, and my colleague Harsh's details in there. The QR code is right there. You can just get out to me straight to my LinkedIn, drop us a note, and we'll be more than happy to answer any questions that you might have. But I do hope that we can create something like this. And on the chat, and that's it from a presentation standpoint. Didn't want to kind of deliberate on it too much. But on the chat section, you would see that we will be putting up a link as well, where you can just click on it and register if that's of interest, or reach out to Harsh and I. And right after this session, I think what we will also be doing is sending you an email with the recording of the session, if you want to kind of refer to any of this at a later point in time, the amazing insights that Imran, Tracy, and Kyle have shared. And yeah, just feel free to reach out to us if you need anything. That's it from my end.
Thanks.
Happy to take any questions if there are.
So I'll leave the questions on for maybe a minute. Thanks so much for sharing that. We've come to the end of the session. I'm just going to keep my eyes open on the Q&A for maybe another 30 seconds to make sure that we answer any questions. Thanks so much for your time, guys. And for everyone who's interested, the links are available in the chat box. And I think you'll receive an email with more details around what your participation, and also with links to today's session. So I don't see any questions for now. So maybe if you guys have questions, you can direct it to Ravi and his team separately. Thanks again for being a part of this morning. TGIF, have a great weekend, and I look forward to seeing everyone in person soon. Take care, everyone.
Thanks, everyone. Bye.
Thank you.
Bye.
Bye, everyone.